Where I've just had the opportunity to sit down and have a lengthy discussion on the state of the markets with Palak. So, just giving this introduction because markets have been in turmoil, even though whatever's been happening in say global markets, US has been volatile, but mostly in the same range. If I actually take a slightly larger time period, but India's been down, down, and down, irrespective of how UK does, Asia does, or any other part, or whether the dollar is rising or now falling and bond yields are rising or falling. So nothing is really having an impact, including government measures. So it was interesting to really get into the depth of what is happening behind the scenes, which is more from a journalist point of view. Some of the comments may be a little harsh. I'll try to tone it down with the edits, but I do want to get the right message across. So enjoy that in this very detailed discussion that I had over an hour into what is really happening, and it aligns with the market view that we've really written in the long short report as well, Men in Black. If you have not read it, it's still out there. It's a good time to go and really get a full global perspective of things happening and how to connect the dots. But what we get into this discussion has a lot to do with not just the geopolitical angle, which from his journalistic experience has much more insight. He speaks to hundreds of people, and also same way both the political and market insights of what is happening behind the scenes in the among various circles that he moves around in, and that's what it reflects in his opinion of things. So understand that it comes from that perspective, and nothing really to demean anybody or any organization, but really to get the picture across as to how things are happening and why the markets are responding in the way that they are. So let's try and get his insights, and like I said, to then further get an in-depth read on how I've linked all these things with my reading on what is happening in global macro and how it will play out for India, because India's macros are also changing once again. Read the long short report, Men in Black. Okay, so here let's get into the interaction. Hi everyone, we are going to have a very, very interesting discussion, and I have a special guest with me. You've probably heard him many times on my Twitter spaces. It's none other than Palak Shah. He's the author of Market Mafia, the book you can see behind, and he's also the editor at Business World, and brings years and years of experience, not just in markets, but in investigative journalism, which is why he wrote that book. If you actually know all these scams that have come out, related to the NSE over the last 2 decades, many of them have been highlighted by him in this book, well ahead of them playing out. So that's where he comes from. And today we'll try to discuss what is happening around the world, because he has a different take, given his exposure to global geopolitics, local politics, more than what we can think of. We look at charts, we look at fundamentals, but what is really happening at the ground level, and try to understand what it means for our own market and how we should approach it. I've anyway been ranting about our market for days and days, so let's get a more detailed discussion, and welcome Palak to this discussion.
Thank you very much, Rohit. In fact, I look up to Rohit's analysis a lot, and whenever something is happening around the globe, I see a big say geopolitical event happening. So I usually call up Rohit and ask him, what are your charts saying? Because I have known him for more than a decade now, and I see that, he gives a very precise analysis which is in tune with what is happening. And most of the time, markets may behave differently, and, nobody ever has been able to decode point to point moves of market, but largely Rohit gives an analysis which gives a proper direction, and we know how the markets are likely to behave or where they are moving. So that's why I look up to Rohit for interesting conversations.
Thanks Palak for that, and getting to the moot point and the tough one, because every time there's a market turn, we can get some of them right, some of them wrong, but many of them right maybe before, ahead of time. And the pain is often waiting for things to fall in place and start showing up the way we are thinking.
Absolutely.
So I started to think that maybe we could go into a deep multi-month correction when we started to sell off in October. All the concerns were there from valuations, and then it spread to global interest rates and the dollar and so on. But as we came to, February, I started to think that maybe things might not turn out to be as bad as what I was originally thinking, or at least maybe there's something left, some steam left before all that really plays out. So it brings me in a circle back to one thing and one thing only, which has to do with the US debt or the global debts and how they're going to deal with it. Because if they're all going to deal with it through inflation and they succeed, then markets keep going up because there's a lot of liquidity. And if somewhere they fail to do so, which is the risk, and every time that risk shows up, we all get scared that what if things fall apart? And that was the fear, I think, when bond yields were rising for the last 3-4 months, the fear that, will they be able to pay their treasuries? And then if Donald Trump does all these tariffs, what will happen? How will they manage their expenditure? And the dollar is rising, So this is the back and forth that I'm going on again and again, and which is not allowing me to really take a 5-year view of things, because I don't know whether something breaks in between. Every time it normalizes, we step back and we turn bullish. And once again, I'm trying to do that. But we are not out of the woods yet. For the last 10 days, we are talking about it. And when I say not out of the woods, I don't mean the setup that I'm studying, but that the market is not responding to, anything. So what do you think the state, so that's the first question to you, is what do you think the state of affairs is that is keeping it so much under pressure? Is it got to do with Trump, because he's every day in the news now, and now India and Trump are in the news every day, and Tesla is coming to India is in the news.
Very true. So there are there are always two pull factors for the market. One is domestic and one is global. And first, I want to start with the market internals, as I always often discuss with you. So this time also, when we discussed, the data shows, as you have told me, the data shows that foreign portfolio investors are holding one of the highest amount of shorts ever in the Indian market. And there is too much of pessimism this time in the market. And I think this is the worst fall that India's stock market has seen after COVID in the past 4 years, if you say. And, so coming to, so what gives me a lot of confidence in the markets is the sole fact that, FIIs are holding the largest ever short position. So my experience tells me that, when there is such a huge built-up of short positions by foreign portfolio investors, the markets always have a cushion on the downside. Simply, to simplify this, it means that, when the markets are going down, FIIs are always going to cover their shorts worth billions of dollars. So this is going to keep the market or stall the market or halt the market from going down a lot further significantly. So that gives me confidence. So I feel that, bottom is around 22,800 or say 22, but there's not much of a fall left for Nifty, at least in the current setup, at least in the very short run. You may not see Nifty going to 20,000 or say 21,000 in the very short run until the FIIs cover a significant portion of their short positions. We also got to see what domestic traders are doing. By domestic traders, I mean the big HNI traders, and there is data of domestic traders which also comes. I think you can put out that data. That will be interesting, because these domestic HNI traders are the real insiders of the market. So this is my take on market, that currently we are absolutely near the bottom and we may rally from here rather than going down, because simply on the point that FIIs are holding the largest amount of short positions ever in the Indian market, unless something drastically wrong happens in the world, which we don't see. We'll come to that. So I was talking about two factors, which is the domestic factors and the international, which is the global factors. Now, as I have seen the market, there is always a lobby in the market, which holds the strings of the market in India. Now that lobby in the market has created this sort of an atmosphere of pessimism, despondency for the past 2 years or so, or more than that. Whatever the Modi government does, however positive it is, the markets are moving in such a manner that there is always this sense of pessimism remains, negativity remains. So which is giving a bad name to the government, despite a lot of positive measures that they may have taken. Now, if you take this recent measure of
The tax cuts.
the tax cuts, 12 lakh up to 12 lakh, they have given the benefit of, tax benefits to the common people in India. Now, this is such a drastic move by the government, Those who are earning 12 lakh salary, I think at least 70-80% of the population is, or more than that, is covered in this. Half of them are farmers, a lot of them are farmers, a lot of them are women, and those who are earning salary, I think huge amount of population is covered in this. So people will be very happy. This will push up their spending power. If you see, Kumbh Mela is the biggest example of India's spending prowess. 51 crore people have taken a dip in the Kumbh Mela which is going on. Now, if you see the average cost of travel, the average cost of stay for a single person goes to something around, conservative figures also, if you take 15,000-20,000 rupees per person. Imagine 51 crore people have taken a dip there. Imagine the kind of spending that has happened. Imagine the kind of business that has happened. And there are all sort of private players in the Kumbh Mela who are reaping these benefits. So what are they going to do? They are not going to spend this money abroad. All this money is again going to come back into the system. So India's economy, this circular economy, has great power, as I see. There is a lot of spending power. Now, why there is this slowdown in the market? Why there is this pessimism in the market? I see the biggest factor was that government spending slowed down hugely, because, and that chiefly had to do with the elections. Last 2 years, we saw this election atmosphere, a lot of allegations by the opposition parties. Government has to be very conservative on spending. So I think last year's, out of the budget, last year's 30% of the spending did not happen. So imagine that 30% to be added to the spending this year. And this year's 10 or maybe somewhere between 10 to 20% has been increased. So 30% plus 10-20%, if you take average around 40% of increased spending that the government is going to do, just imagine the kind of push that the economy is going to get. Plus, I think after 13 years, RBI has cut this interest rates.
The longest pause.
So there is so much liquidity in the system, and despite that, so I would credit the lobby in the stock market, which is, the power lobbies who are handling this narrative in the stock market and media of creating this atmosphere of pessimism despite having so much of green flags in the economy. The government is sitting on huge surplus cash, which has ever happened in 70-year history of the country. The banks are fully recapitalized. I mean, whatever loans they have written off is a thing of past. You may say that was a scandal. Well, fine, you probe that, you hold people to book, you hold them guilty. But today, the economic scenario is that banks are fully recapitalized. There is no bills of payment crisis in India. Liquidity is abundant in India. Liquidity is there in abundance in India. So, on the domestic side, I don't see as such any crisis. The biggest hit was SEBI. So, under this current SEBI chief, the regulator made a lot of rules which hurt the markets badly. I think, you cannot say that there are too many accidents happening in one lane or a particular road, so you shut the road. That's what SEBI has been doing. You are a regulator. You should know how to control those accidents which are happening, how to control market manipulation. Instead, what you're doing is you're shutting down all the avenues. So I think that
can't we also argue on? I mean, just to be the devil's advocate, that all the measures they have taken, especially on margins, on tightening liquidity in the market, or avoiding excessive leverage within the brokerage system, may be based on past instances that, okay, this is what happened in the past, let's not repeat that. So let's put all this in place so that whatever happened before doesn't happen again. This is one way of looking at it. But definitely in the near term, it has meant that people can't act and trade the way they did before. But if we do get to the T plus 2 hour settlements, which they have been talking about, or 1 hour settlement, then that also sort of gets solved.
So you have given me one example. I will give you another example. There is a rule that SEBI came up with recently in the past 6 months, I think. That rule says that mutual funds have to look at the average weighted price of a stock to buy the stock. If you deviate too much from the average weighted price of the stock, then you have a lot to answer, because it brings you under the lens of suspicion that you're doing some sort of front running, or you're trying to manipulate the stock prices. I mean, what sort of mindless application of law this is, or rule this is? I mean, which market regulators dictate to mutual funds at what price you can buy and what price you cannot buy? This kind of rule making spreads so much of fear in mutual fund houses that the dealers refuse to punch trades. They waited till the last half hour of the day. Lot of them waited till last half hour of the day to punch trades, thinking that if they punch trades, stock has fallen. If they punch trades here, they don't know what is going to be the average weighted price of the stock, and they may have to answer. They will be under the lens for manipulation. And this is one of the chief reasons that despite having so much liquidity, mutual funds have turned cautious in buying stocks, even in falling markets, even when valuations of stocks have come down sharply. So I'm talking about this kind of rule making. But I recently wrote a story, SEBI's License Raj, which in Business World, which details all the negative impact the rules have had. And there are several such. Like I'll give you another example. There were some 1,800 stocks that were available for to be placed as margin with the clearing corporation. Suddenly, some 800-900 stocks we are not going to accept as margin from the next few days. Now, this was such a shock for the market. Those who were holding those stocks, those who had borrowed money or borrowed positions based on those stocks, overnight they had to cut. So this is the kind of panic, as to what price you can buy, which stock you can buy. I can go on and on. There are hundreds of stocks, thousands of stocks today in the surveillance segments. They come in and out at whims and fancies. There are examples of stocks which have been in the surveillance segment for more than 1 year. I mean, even are stock exchanges even answerable as to why they are putting, what kind of manipulation they have observed, and if they have kept it there for 1 year, if they haven't observed any kind of manipulation in those stocks, why don't they take it out of surveillance? So I think there are a lot of rule making issues. So this is one way of spreading negativity in the markets, which has happened. There are rules relating to FIIs. Yesterday I was talking to a policy maker. There is a rule which says that if FIIs or foreign portfolio investors have not done, I have to specifically look into this rule. But since policymaker told me, I am explaining. He said, if FPIs are not doing trade for some time, then they have to pay some penalty, or there is some sort of a curb by SEBI. I mean, how does it even matter if an FPI is not trading, or has a license but is not using that license for years? I mean, I want a license. I have taken a license and I've kept it. As an FI, I have invested in the Indian market. My investments are there for 15 years or 20 years and I'm not doing anything. I think as long as it doesn't bother, there's no manipulation happening, or as long as it doesn't disturb the equilibrium of the broader market. Now, this is the domestic thing. As I said, there are lobbies, who are trying to do this every time there is some kind of report coming. There's too much of rumor mongering. There's too much of mudslinging on Indian corporates. So these things are going on. Second, I come to the global factor. Now, global factor, you said, Trump has come and, there's a lot of fear. If you analyze Trump's first term as US president, it was all based about talking the markets up. That creates positivity for him in US, positivity for the US economy, that helps him build his own image. If you analyze Trump, his speeches, what he talks, he always talks about buoyancy in the market. And he says, I have got that kind of buoyancy in the market. What is he doing? When, Trump got elected, few days before, he was going to take charge in January, I was talking to Rohit. And the first thing I told him was that, as soon as he comes, his first attack is going to be on the war that is going on between Russia and Ukraine. And you see, I think 2 days ago, US has decided to reopen their embassy in Russia. And that shows that he is going to halt this war between Russia and Ukraine. And once that happens, a lot of global uncertainty goes out for the markets. There is stability in the global geopolitical scenario. Once this war goes out, there is stability in the oil prices. So this is what Trump is going to do. He's going to, he has that carrot and stick approach. Everybody fears that, he's going to impose too much of tariffs. You take example of India. He spoke about imposing tariffs on India. He built up that rhetoric. He built up that narrative that, he's going to impose tariffs on India. He called Modi ji to US and he made him sign the oil and gas purchase deal. So he's using this carrot and stick policy. He's going to do that with every country. He's going to call head of every country, make them sign agreements to buy more from the US, which is not bad because the quality of US oil is way different than the quality of certain other countries. And that's where India can strike a balance on buying oil. We buy billions of dollars worth of oil, and this is geopolitics. You have to always strike a balance, and it's always give some and take some. If you give this, what are you going to get in return? We may know in future how our PM has handled the situation, but I don't think tariffs is going to be such a big risk. In a nutshell, is what I mean. And markets, the geopolitical scenario, in fact, is going to be more stable than it was for the past couple of years. So, is there anything more negative in the US in terms of economy or say credit crisis? At least the news headlines or the reports or whatever stories are coming out of US or nothing suggests. I think Rohit can highlight more on that. Is there anything negative in the US? Credit crisis or something like that?
So not in the so what they did in 2008 is sort of again like in India, taken it out of the banking system in a significant way. The only thing left is of course sovereign bonds, and whenever that part shows up, they'll intervene because it's got to do with the government, like they did in 2022. And since then the bank index has actually recovered significantly from there. The only last thing has to do with interest rates. So if interest rates don't rise, there's no sovereign crisis. If interest rates go down, so will they let it rise beyond a point? The answer is of course no. So there cannot be a crisis unless there is a crisis. It's a very tricky, tricky circular argument.
I think Trump has too many levers to pull to control the economy from going into the crisis, or we all have seen the landslide victory with which Trump has come back after so much of pressure that he has been under for the past 5 years. under the Biden administration to come back to fight such a tough battle and to become the most powerful person in the world is by no means a fool's job. So, the perception that he is a fool is out of the window. I don't think. I think he is smarter than a lot. If you see his past interviews when he was very young, exactly the things he's been talking then, he's been talking now, and he's been moving on those things. He used to talk about how Japan was stealing, manufacturing from the US and jobs. He spoke about China. This has been his narrative for all along, and this is where he is acting, and this is where his success is going to be. I mean, making countries sign agreements to buy more from US is the biggest success that a president can boast about, and which is what Trump is doing. From India's perspective, when Trump says that there is disparity in tariffs that India puts on the US and US puts, I mean, we can say there is disparity in currency value. We can say that US dollar is valued so higher than India. I mean, we can also talk about, but anyways, our approach under the current regime and the incumbent prime minister is not to engage in a very conflicting environment with the US or, our approach has been to be a very balancing power and, manage things in a manner that it's always give some and take some. That is the kind of approach that the incumbent regime is taking, unless they are pushed to a corner. But I see things improving for India after this Trump administration has come. The biggest thing is that markets behave, in an extraordinary exuberance or pessimism. So this is what is happening. The kind of selling that is happening is, has gone too long and too much of pessimism in the market. When there are not too many negatives in the market, India has no financial crisis. The government is not in the financial crisis. Government is sitting on huge surplus cash to spend. There is liquidity in India. We are selling tents. Tent stays in Uttar Pradesh Kumbh Mela for 30,000 a night and 40,000 rupees per night. Even the lower middle class people who are going there are able to spend at least 20,000 rupees, 25,000 rupees on average, and 51 crore people have gone there. So the kind of spending power that India has is huge, huge. If you talk about US having 8,000 tons of gold holdings in their treasury, I think Indian public has at least 25,000 tons of gold. Every year for the past several years, India has been importing at least 1,000 tons of gold each year. So I think India has tremendous spending power. India is not at a stage where it is going to face so much of a financial crisis. So all this I see happening in the market is, result of push and pull between the lobbies that control the strings of power and economy and finance and markets.
So in a sense, what I'm coming to a conclusion, hearing your entire thesis is that the market's weakness that we are seeing today is driven more by the news that people are reading every day, or by measures that are being taken, as you mentioned, by SEBI, which you do not allow funds to aggressively enter into the market. So which means that even those who are sitting on cash and we think, oh, mutual funds have so much cash, they should be buying, but they cannot really make aggressive entries. They'll be doing it so slowly that we might not see the kind of speed and momentum that we used to see before. And that means that the recovery for the market from here might end up being slow and steady rather than quick and easy. That may be one way to think about it. But in the broader sense, given that there is a lot of liquidity in the Indian system, in the Indian market, and every other market around the world which has managed to recover through this crisis in the last year or two, whether it's Europe or China, has done so because of the creation of excess liquidity. And so we are also now in that same scenario. The only question is we need to have patience to let it play out, because the aggressive buying may not really show up given the rules and restrictions.
Absolutely. I think after 4 years of, 4 consecutive years of rally, if the market falls 15% or even 20%, I don't see there's any reason to panic so much. And the kind of fear that is there in the market, I don't see so much of reason for that. And it's all a creation of narratives based on social media, talks and all. And I think that's where these lobbies come into play. A lot of models of tradings are working, and there are these lobbies who have these models deployed in the market, and that is where they deploy those mathematical and financial models in the market and the machines in the market, and then accordingly they start spreading that narrative. And they also control a lot of strings in the power lobbies, and that's how they manage this whole game. It's beyond your imagination how they control billions of dollars worth of trading in stock markets. And
I always try to tell people that we should not go into conspiracy theory, because
it's not
very,
conspiracy.
Very hard. It's very hard to track.
It's I'm telling you this so simply because of the experience that I have had of covering the markets for 20 years and lot of inside knowledge that I gain into the markets by covering, meeting people, doing investigative stories, deciphering a lot of headlines which common people may not know. So that gives me a lot of insight, and I see the characters playing, the way they talk, the way they behave, the way they make rules. So that is the reason I'm able to decipher, and I'm able to say that. I don't want to take names.
No, of course
but
not.
All my stories, if you read some of a lot of my stories on markets and special stories, you also will be able to decipher, if you follow them, where things are moving, who is doing what. And so that's how.
No, what I meant to say by the conspiracy part is, even though we hear and if we speak to people who are in the business, and we get a sense of how things are moving in the behind the scenes, when it comes to being able to do an analysis, because in the end nobody has access to what is happening at the highest level, and therefore as analysts we try to perceive that based on data and information, which is why eventually we come back to looking at whether FIs are short. The other data point, another one which I've been putting out, is the number of stocks that are below the 200-day average. It's out of the Nifty 500, it's come down to almost 13%. Even when the Nifty was at 15,200, it had only come down to 15%. So the number of stocks above the 200-day average, only 13, means most of them are below.
Most of them are below, right.
So when the number is so big, that's 87% of the stocks are below, then typically we have seen the markets bottom out. So that's where we measure market sentiment and try to say, okay, if everybody is so pessimistic, it's probably not the thing to do. You have to do the opposite. And unfortunately, as you are trying to reveal to everybody that there are forces at play that make all this news look bad, when some of it is actually not so bad. A lot of positive has happened. In fact, the entire Trump scenario, when we are seeing it play out on a day-to-day basis, we've already backtracked from the amount of tariffs that were going to come to what is actually happening. And now with India also playing ball, with the Tesla coming in, with the EV taxes, I think today's papers are saying even the tax on EVs will come down from 100 to 15%. The game has changed.
And Trump is just playing to the gallery. Anybody who follows him for a while.
And then people are trying to say, no, this is bad for the auto sector. I'm wondering, Indian auto sector export kitna karta hai? What are the US exports for them to be affected by a tariff? So it's really...
In fact, I see, instead of rupee going further down significantly from this level, I see it improving. So if there is an anticipation of rupee improving against the dollar, I think a lot of inflows will come into the country instead of going out. And I'll tell you one very important thing that I have noticed in the past couple of months, and why markets have actually lost 5-7% more than what we were in December. And why a lot of small mid-cap stocks have crashed badly. So January 2nd January was the day when a lot of things changed for Indian markets. 2nd January, SEBI came out with order on Ketan Parekh and his associate, Rohit Salgaonkar. So, namesake, Rohit, beware. So, SEBI came out with the order. Now, I have analyzed the order deeply. I have done 5-7 stories, and you will find all the stories revealing more and more about what has really happened and why SEBI came out with this order and what SEBI lacks in the order and how big is this trading scam. Now, what has happened is SEBI came out with this order, and SEBI has been raiding few brokers here and there. They conducted raids on brokers in January, again in Mumbai, some other places. It fits into the pieces of how sentiment is systematically spoiled. So what they did is they came out with this order. It was a shock factor for the markets. All those operators, all those big HNIs who were operating in the market started selling, started offloading their positions, started offloading their warehoused positions with the brokers, fearing SEBI action on everybody. So this got a cascading.
Just to highlight to people what we're talking about is the process of warehousing came into picture. And since he had done, Ketan Parekh was just one factor who was doing something which they thought was wrong. But moment you say that this is not the way to do it, everybody else who was doing warehousing and has been doing it for years for institutional players and giving them larger blocks, they all got scared and started to unwind. That is what.
Yeah. Warehousing of stocks is a strategy used globally by large funds. So what they do is, if a fund wants to buy a huge quantity of some company stock, they will ask somebody to first buy those stocks and warehouse them for the fund. The reason being is, if the fund starts buying aggressively, then the price starts moving up. So they use such people to, gather stocks for them or collect stocks for them and then give it. So this is warehousing modus operandi. Briefly, this is a game that large funds do, and this is legitimate in a lot of sense so far, because nobody from the global regulators have cracked down on this. What happened in the Ketan Parekh scenario was SEBI said he was front running the trades. While that also, that SEBI said, based on certain WhatsApp chat records and, such records, phone records, they said they were front running the trades. But in actual sense, if you see the pattern that SEBI has shown, the Ketan Parekh and his associates were also holding those stocks, also warehousing those stocks for large funds. One of the world's largest fund, they were warehousing those stocks. So all those who were doing this kind of an activity got scared. And that got a cascading effects into the market. Every big broker where this kind of warehousing was happening stopped it overnight, suddenly. So that was a shock for the market. And hence, there was so much pressure on small and mid-cap stocks because of this.
We thought it was margin funding when that is not unwound. And when I look at the Nifty total equity futures open interest in the derivative market, I see despite the crash, it has not come down, which means that is not where the unwinding
is.
The unwinding is somewhere
else. So this is where it is. The small and mid-cap stocks and warehousing and all those operators who were trying to, what operators do is they buy stocks at 10 brokers. They keep those stocks there. They pay some margin, they keep those stocks there. When some event like this happens, when there is a crackdown by the regulator, every broker is concerned about the positions they are holding. So they go back to the operator and ask him to overnight either wind up the position, bring more money, or take action, take a drastic step immediately. That is not possible, to do. Not all positions can be managed immediately overnight. So then selling will happen, unwinding will happen. Then there is a cascading effect. So this is what happened since January. If you see till December, markets were fine. I mean, they were trading around 25,000, between 25 and 26,000. After 2nd January, there was a massive fall. Small and mid cap stocks also fell badly. So this is what has happened, in the markets. And that is the reason we are seeing so much of pessimism and pain in the markets. Unless SEBI comes up with something more, I don't see any more pain in the market, because all this selling that had to happen has largely been, largely. And now, I mean, people are wondering if Nifty comes to 20,000, I will buy. So when that is the scenario, I don't think index can come down further, and small and mid cap stocks can go down a lot more from here, because India is not shutting down. We are into business. India is a bumbling economy. We are doing so much more business. Game of narratives that has been created using the social media and the media. I'm in the media day in and out. I see what goes on, how people approach media, and what are the kind of angles editors take, and what are the kind of stories they try to push. So this is what is going on in the country. So I think a very healthy correction has already happened in small and mid cap stocks, even the large cap stocks. There's no crisis in the domestic market. There's no political crisis in India. China is also not doing any aggression around the border that it was doing earlier. I think Pakistan. So we don't have border crisis as of now. When there is too much of pessimism and fear, you always buy. Liquidity is abundant.
And everything is known. Everything is known. All the fears are known. The factors are known.
It's only matter of time
that we start factoring in the positives, and the markets start. And it's usually once that turns, the tide turns, then the tide just continues to flow.
Stop. Yeah.
It doesn't flow.
In fact, Rohit is saying that, markets may move up slow. I think
I was basing that thesis based on the regulatory aspect that you threw in, that, the funds are going to not be able to buy aggressively if they're deploying a lot of money and they have to do it within those ranges. Then how do they deploy these thousands of crores which they're getting every month?
I think with the regime change in SEBI, which may likely happen, I think that fear will also subside over the next 2-3 months, if at all there is a regime change in SEBI. I'm not saying that SEBI is doing something wrong. So a lot of what you're saying is what has impacted the sentiment below the surface. But unfortunately, I think most of the people don't know about it because it's not written about in the press so aggressively that this is causing this. I don't remember that being the case in like 1994 or 95. Every measure used to be written about and criticized. Today, there's usually no talk about a lot of things that are done. People just gulp it down. The brokers just implement it. I worked with a broker. I know how painful it is when these measures come, because it's like everything is compliance. Like it's like a full department now. Everything is compliance. It's become like compliance is the business and business is the side business. That's how brokers are suffering. So I think
we need to make it easy there also. We talk of ease of doing business. I think in the financial sector,
that is not there. That is just not there.
We need to make it easier for people to function, rather than to make it over-policed or everybody to feel threatened at all points of time.
Absolutely. So that's why I feel, measures like T+2R settlement, I mean, it's just playing to the gallery. Markets were going on absolutely fine. There was no problem. You bring, T+1, there was no crisis.
No, this is T+0.
T+0, I mean, I see the system as a big wheel, huge wheel. The wheel moves, but it's very slow. And, there are forces which are moving that wheel. So when the forces change, I mean, the moment of the wheel also changes. So that's how I see it. But anyways, as I said, and whenever, so what I do is I have information, I analyze the narratives going on, and Rohit has the data. And when I match that, it's all a made up narrative is what I see, Rohit. To be very blunt.
You have been very blunt. And I think the takeaway is the time to start getting invested again in the markets. If you've been fearful, you know that everybody is fearful. The time when everybody is fearful is the time to get greedy. It's an old saying. It's harder to do than to say. But we can only tell you that it's time to implement. So that is, I think, the message.
And 5 years is too long a view. I mean, you can, 2 years is what I see.
Correct.
Things improving.
I also
from
think
here.
that it's a 2-year window right now that things can get significantly better.
And then
then we will assess it again at that point of time.
And as the US government ages, a lot of other issues will crop up. So for 2 years, Trump will have that honeymoon period, where he'll do a lot of things and all opposition to him will have no impact. After that, let's see how it goes.
So great, Palak, great insights. I think a very deep dive into what is happening behind the scenes, some of the scary stuff also, and not what people usually hear or expect to hear. But I hope it sets the stage clear and mind clear in terms of what they ought to be thinking and doing with a 2-year perspective in the market. So
for me, the biggest takeaway is your data that FPIs are holding largest ever short position in Indian market.
And last night's data is again highest. 192,000 contracts short.
And when there is no crisis at all, And if you analyze all the pain points or pressure points, you don't see any crisis coming. Whether it is liquidity, payment crisis, Indian government sitting on so much of cash, banking sector recapitalized in India. Where is financial crisis coming in India? No crisis. I mean, they have tried, hitting Adani group badly.
So the biggest issue that we faced essentially was the valuation correction.
That has happened
in a lot of places. Some places where it may happen on a time or over a period of time, but the rest of the market is already there. So you have to clearly fragment it and invest accordingly.
Markets are never, markets never behave in a pattern. So there are always going to be those pockets of imbalances. But largely, if you see, I think that valuation correction has happened and India is not shutting down and there is no crisis. So I think from here, you may only go up rather than going down. Rather than going down significantly is what I see. You may go up significantly up. Is what I see.
And I think that confidence on how much up will come as we go along, because when we say up on a 2-year basis, it definitely can't mean just going from here to 26,000. I'll have to talk of much higher levels.
Absolutely.
So and those triggers will slowly show up, and as they do, then everybody will find it far more believable that we can actually make it back to new.
Plus one thing I would like to add. When this government was re-elected, April, May, when the results came, government was, this BJP was having 240 seats. I mean, look at the kind of state elections that BJP has won after that. Look at the landslide victory that they've got in Haryana, Maharashtra, Delhi elections. So I don't think there is that kind of political crisis also for Modi, and he has cemented his position. If today, he doesn't, if you see the government functioning, they are not behaving as if they hold 240 seats. They are behaving as if they hold 350 seats. That's the kind of confidence. The allies are not going anywhere. So this 5 years, there is complete stability in India. And I don't think, let's see what happens there, but up to 2030, there is complete stability in India on political front, on economic front. And I think that's the way forward. So
great. Thanks a lot, Palak, for spending this time and sharing your views.
Thank you, Rohit. It's always a pleasure to talk with you. I get a lot of insights from you on the markets, on data, and then it helps me shape up those narratives. As I said, I put pieces together. So thank you for that.
Yeah, thanks a lot. Thank you, everyone. And you share this video with everyone. And I hope
follow us on Twitter. Where we break a lot of these behind the scenes stories.
Yes. So get on Twitter and you can catch Palak on at
Palak Shah Journo and
at Indiacharts. So see you all there. Thank you.
Thank you.
Now that you have heard the entire interaction, I'll just leave you with the final points. and that is that at the end of January, where we started to see some of the oversold conditions in terms of positioning, the Nifty was probably at 22,800, and the end of February we are still at around 22,600 or just below that, and which is approximately 1% lower than where we were back then. So the market did bounce into the budget and then sold off again, and because of that up and down movement, we have actually seen the fall further, and especially the broad market, which is the mid and small caps, initially fell much harder through some part of February, and therefore stock specific losses being bigger makes you feel that the market has fallen a lot more. But now what you are starting to see over the last 10 days is some kind of a divergence where some stocks are starting to stabilize. The mid cap or Nifty 500 are not making new lows along with the Nifty, and today is now expiry day. So on expiry day, if these divergences are still in place and the positioning is still in place, what we'll only be watching for is that the large futures open interest which was there, does it capitulate to some degree, which we'll know in the data in the next 2 days. And that might be a sign that, okay, the last hands holding on have sort of given up, and you start the month on a very low position as you enter March. March has been typically historically where we've seen many bottoms, so that is where we'll be really watching out for the trend reversal. Though I did think personally this time it would happen in Feb, and we are still in Feb. Feb is not over. Maybe the low point gets done over here. But main point being that into March, you're not just going to be having year-end. You're going to have year-end management. You're going to have a low positioning at the start of the year, month, and that all can be a positive fuel. So there are multiple reasons. We've discussed many others which are related to macro. And if you've seen the last few days, you do see overnight bond yields coming down. The dollar has been generally weak in the short term. And a lot of that has really helped other countries which were ahead in starting to provide liquidity, whether it's China, whether it's Europe. European markets have gone to all-time highs, beating the US in the last quarter. Asia has been still weak because of the rising bond yields. But I think once that stability, which is already visible, starts setting in, then you do see emerging markets also starting to participate on the upside. And I think that is the main thing we are all watching out for, or waiting for, or hoping to get that final clue. And I think it should be closer than ever to really get that. So that is what we are really waiting for. So this is not, I think, in my sense, this is not a time where you go outright, negative and get bearish or get, panicky, because a lot of the panic selling has already happened, and the last of it might get cleared out through expiry. And so the time is really to start accumulating at the lows, because you get closer and closer to critical supports along with oversold conditions and improving macros both on the domestic and international front. So there's a whole lot of reasons why things could turn positive. But yes, you actually need to see the momentum turn. Now, lastly, I would point you towards, again, Men in Black, the long short report that I wrote out last week. And given where the market side is still relevant, and it provides you the reasoning as to why and where a market should head over the next 6 to 12 months, which is what then we track with our daily updates and posts. So I do encourage everybody to please go and read that, and of course, share this video with your friends, people who would be interested in markets. Subscribe to the channel so that you can continue to get our updates regularly. And we have started to do this weekly show, Markets and Nonsense, me and Chavan. We try to do it every Thursday. We of course didn't do it last week, but you can expect it to keep coming back every week to try and understand the state of the markets. So that's all from me for this time. Catch you all next time. Thank you.